You are listening to chartingwealth.com for Thursday, the 31st of May, 2018. Charting Your Way to Wealth, our book is available for all of our fans. You want to understand what we do here at chartingwealth.com. It's all in the book, my friends. We've got a great video. If you just hit that at the top of your screen, it'll take you to the video that tells you all about the book, and there's a link there where you can purchase the book. Let's jump into these charts. We see stocks are up for the day. We see that 20-year bonds are down about 0.67%. Gold is up just a little bit. Let's first jump into the S&P 500. So far, we're 2 days into the 4-day week. This is typically a 5-day candle, but because Memorial Day holiday, it's only a 4-day candle. And what we see so far is pretty close to a doji, means lots of indecision, tending down. Was an up day 1.32%, but we're seeing a doji on our Heiken Ashi candlestick right now. We see the derivative oscillator gaining upward momentum. We see the price percent oscillator looks like it's trying to cross over, but it's been doing that for a couple of weeks now. Maybe it'll end the week crossing over, going up, and we'll be able to take our down arrow and our weekly vertical crossover going down and move it to one going up on these charts. That is yet to be seen. We'll see if that happens. What's going on the 2-day chart? We see on the 2-day chart, and we talked about this yesterday, things have topped off all the way back in mid-month, back on the 14th, that 2-day candle ending Monday the 14th of May. We see things really sliding sideways and again tending down. This is the first really red closed box candle we have seen in many weeks, actually since the beginning of May. And what we have happening here is we do have a decided change in the sentiment as far as this 2-day candle goes. Derivative oscillators losing momentum, price percent oscillator still heading up just a little bit. But we can see at the close of the candle on Wednesday, the 2-day candle is down. And again, we'll watch the candle, but also compare it with our indicators, price percent oscillator being the main indicator. And it is still heading up somewhat. And again, derivative oscillator losing momentum as we hone in a little closer. Take a look at our 4-hour candle. We can see there was up movement in the morning and the afternoon. And that up movement did pair off the down movement from the prior day and actually go above that just a little bit. But again, as we look overall, we can see that all the way back from the 14th, we've still not had enough up movement to make up from where the sideways slide started after the market peaked out then. So keep your eye on things and see. We don't have a crossover going up yet. Again, we might, that is on the 4-hour chart, and if that does occur and continues, we may have a weekly vertical crossover at the end of the week, but no trade at this point on the S&P 500. We will keep watching and see what we see. And again, for the day, up 1.32%. What's going on the Qs? That's the Nasdaq 100, the tech stocks. Again, we see where the market's been topping off about the same point, around 170, something like that, for the last going on 4 weeks. Now, at the end of the prior week, we did have a weekly vertical crossover going up. And we see that the derivative oscillator is gaining momentum. Price percent oscillator is heading up on the weekly chart. Let's check out the 2-day chart. Well, it crossed over going up back on the 4th of May and then went up and then really sideways starting around the 14th. And again, so far we've had for the latest 2-day candle is a red spinning top, which means indecision tending down, although price movement is above the 2-day trend line. Derivative oscillator losing momentum, price percent oscillator still heading up. And let's take a look at the all-important 4-hour chart. It is trying to cross over, going up, and some of you may be looking at that. I would encourage you, it has not happened yet, but keep an eye on things in the morning. You may see at the close of the noon candle, you may have the opportunity to jump in. We've seen the derivative oscillator already go positive. Price percent oscillator hasn't yet crossed over, so keep your eye on things. We are up at the Bollinger Bands right now, but they can expand out and allow more up movement, so you may have the opportunity after the pullback here to jump into an up trade on the QQQ, that is the Nasdaq 100. So again, we have everything going in the right direction, the 2-day chart and the weekly. Pullback looks like it's over on the 4-hour, so keep your eye on things. You may have the ability to jump in and ride an up trade on the Qs. Keep your eye on it. Now, let's talk about TLT, 20-year bonds. We see that it crossed over going up at the end of this prior week on the 25th. We're just now starting to see the derivative oscillator go positive. Price percent oscillator heading up nicely so far. 2 days into the latest weekly 4-day candle because of the shortened work week because of the holiday, we see that we have a green open box candle. First one that we have seen in many, many weeks on the 20-year bonds. Again, down for the day 0.67%, but the candle's building, derivative oscillator's heading up, price percent oscillator is heading up. What's going on the 2-day chart? Price movement is above the 2-day chart. In fact, we can make sure we draw our trend line properly. Price movement is continuing to move up. Of course, we see that the derivative oscillator is gaining momentum. Price percent oscillators heading up quite nicely. And of course, we now have both the 2-day and the weekly heading in the right direction. What's going on that 4-hour chart? Well, that 4-hour chart is flat at this point. Of course, we are continuing to keep an eye on that. We had a jumping in point after the morning on Monday or around 11 a.m. actually. Things, again, are worth paying attention to. We had basically a doji in the morning and we had a spinning top, meaning again indecision tending up in the afternoon. So keep your eye on things and let's see if bonds continue to rise on the practice trade that we jumped in late Monday morning or early afternoon. We'll continue to keep our eye on things. Again, tough time of year to trade, but when they present themselves, let's practice them. So that's where we are on TLT, continuing to watch the weekly candle build after the weekly vertical crossover going up. Now, lastly, we go to gold on the weekly chart. What's going on? Well, price movement is still below the weekly trend line as gold continues to trend down. Gold was up 0.16%, as Amanda just said. Derivative oscillator still heading down. Price percent oscillator still gaining downward momentum, even with a green closed box candle. We look at the 2-day chart. What do we see? Well, we see that right now it is a doji, means indecision tending down. Derivative oscillators losing downward momentum. The price percent oscillator is headed up, but we still have the weekly and the 2-day in confirmed down moves. As we look finally at this 4-hour chart, what do we see? Well, we're waiting to see if it's going to rotate over and head down. It's been sliding sideways on us really since the morning of Thursday the 24th, where gold peaked out. Derivative oscillators losing upward momentum. The price percent oscillator is still heading up. So keep your eye on gold. If it does rotate over on this 4-hour chart going down, that would be a jumping in point for you on an inverse play. That is a short trade in gold. So let's keep our eye on things and see what we see. We want to practice all these things. This is the toughest time of year to trade because so much of the volume tends to be out of the market. Sell in May and go away is not a market adage that came around for nothing. So again, keep your eye on things, continue to practice. This is a time worth practicing because if you can make it during this toughest time of year, man, when we hit the fall-winter trading zone, you're going to be feeling great. Make sure to keep things up on your daily market worksheets. Once a week, that weekly market worksheet, and every time you do a practice trade, use our trade worksheets. Again, if you want to have a copy of our Trader's Journal, we have those printed up, spiral bound, beautiful, 8.5 by 11 cardstock on the front and back, a place for your name, your email address. Every single day is laid out for you, and it will supercharge your training. We also have free versions available, PDFs. Just make sure that you sign up for our daily market reviews at chartingwealth.com. Subscribe there for free. Also follow us on Facebook, Twitter, Instagram, and please subscribe at YouTube. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.